Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome back to the Small Cap Discoveries conference call. Today on our call, we have the CEO, Greg Wong from RIWI Corp. RIWI trades on the TSX Venture Exchange under the symbol RIWI or RIWI, and it also trades on the OTC under RWCRF. The company is currently trading at 55 cents with about 18 million shares outstanding, or about a $10 million market cap. I'd now like to hand it over to Paul Andriola.
Thanks a lot, Trevor. Greg, good to have you back. It's been a little while since we last spoke. Last time we spoke, you were about to implement some changes. We've seen some changes here, all sorts of things to sort of get updated on. So love to get into an update on how RIWI is doing. But before we do that, why don't we just remind everybody what's RIWI all about?
Sure. Thank you, Paul and Trevor, for having me again. Always appreciate the opportunity. So RIWI, again, stands for Real-Time Interactive Worldwide Intelligence. And it's really a survey platform and technology that enables us to intercept people online and deliver them surveys. And we do those surveys for a number of different types of customers, everything from governments, NGOs, international development firms, financial services, more recently into some high-tech firms, as well as academic type customers. So that's kind of what we do at the highest level. Maybe just a couple of quick highlights. So Q2 was a decent quarter for us. We're Q2 last year to Q2 this year, we were up about 150%. So we've had some growth. If you look at our H1 numbers from a revenue perspective, we are on track to surpass all of 2022 revenue in Q3 of 2023. So I think from a revenue perspective, we're definitely showing some growth. And we actually have, it's within the realm of possibilities that this be the highest revenue year for RIWI in its history. So it's we at least have line of sight to that. From a cash burn perspective, we lost more in Q2 2022 than we will lose all of this year. So, we've taken our cash burn way down. We have ample cash, over $2 million USD in the bank. And we, our cash burn, we're expecting to bring it down over the next couple of quarters. And from a overall perspective, we've for the first time, let's say in several years, we've actually given guidance, and the guidance was we will be cash flow positive on a run rate basis sometime in 2024. So let me pause there. There's lots of details I can go into, but let me pause there and see if there's more specific questions.
Perfect. Well, Greg, 150% revenue increase. What's happened? What caused that?
So the first thing I'll say is Q2 2022 was a terrible quarter for us, right? So the 150% plus growth looks really impressive when you look at it from that perspective. But I think overall it was a good solid quarter for us, but maybe not as impressive as what the numbers would compare it that way would show. Compared to Q1, we were down slightly compared to Q1 of this year, but we're expecting to be back in the 7-digit figures when we hit Q3 again. So things are going well. But what's really happened, between I think our last call was last year and this one, so we've now broken out our revenue. So again, a year ago we were 100% project-based revenue, which meant every time we won a customer, it was for a project. We would deliver that project and recognize the revenue for that project. Sometime last year we started the Sorry, some feedback, but starting sometime last year, we started the transition from a project-based company to more of a recurring revenue-based company. And we now have 3 revenue streams. We have recurring revenue, and recurring revenue is either long-term subscriptions to our platform or to our surveys, or it is buying access to our data that we have. So not necessarily a survey, but just buying access to core data that we've collected or continue to collect. So we have recurring revenue, we have transaction revenue, and transaction revenue comes from the research on mobile acquisition we made last year. And again, as a reminder for everyone, that segment of our business is where we dynamically match survey respondents to survey marketplaces. And the system does it automatically. There's no manual work. It's just, it's almost like a credit card transaction. Every time we match and someone enters a survey, we get a transaction fee. So that's another piece of our revenue. And then we have still project-based revenue. So what's happened is we've gone from pure project to having multiple revenue streams, some of it recurring, some of it transactional, and some of it project. And that has given us a stable base as a company from which to grow on.
Gotcha. And so you mentioned sort of an emphasis on recurring revenue. Can you give us sort of right now what kind of percentage of your revenue overall is recurring?
Yeah, so our recurring revenue in Q2 was 357,000 out of our 928. So call it 40%, 35, 40%, somewhere in that range was recurring revenue. So I think that was a good, considering we had, I think we reported last year in Q2 was around $2,000 in recurring revenue. So it's a significant boost.
Mm-hmm.
So we have a long-term target to get to 60% recurring revenue. But if by end of the year we can be at 35 to 40%, we'll be quite happy.
Mm-hmm. And I mean, obviously, everybody loves recurring revenue. What are you doing to sort of increase that? What things are, what sales projects or what programs? What are you doing to try to increase that?
Yeah, so a core part of our strategy was originally to build a recurring revenue. So we started with that. We came up with strategy and said, who are we? What do we want to do? And how do we want to do it? And so we came up with a number of ways that we want to grow recurring revenue, which is starting to happen. But those triggers or those pillars are, one is selling long-term access to data. So as we start collecting data, and you've probably seen since last year, we've been talking about our Compass data series, which is a series of data, 3 different surveys we do around the world on geopolitical risk. So we do this with our partner, David Wu, and we survey these people on, military tensions, different risks, and then we sell access to that. So one of the things we're doing is trying to have more of these data sets that we then try and sell access to those data sets. The advantage is every new customer has no marginal cost except for some sales commission that we pay to the sales team. But because we've already paid to collect the data, right, it's just a new customer is just incremental revenue and margin. We are also selling access to our platform from a number of completes. So again, we have a very unique patented technology, RDIT, in order to collect, in order to find respondents and collect data. Well, we do that, and we're now going to organizations and saying, sign up for a 12-month contract or 24-month contract or 36-month contract for X number of completes per year. That's survey completes. And if you do that, we'll charge you $5,000 a month, $10,000 a month, whatever it is. And then we'll deliver those completes as we go along the year. So there's data, there's access to basically surveys and survey completes. And then the other thing that we're doing is working with customers to sell them long-term software as a service access to the analytics in our platform. So, our platform has several analytic capabilities, and we're starting to allow customers to load other data into our platform as well, where they can then potentially buy just some of the analytic capabilities. That's a very new part of our business. We're not working it out. It's just within what I'll call our subscription or our recurring revenue, but it's a very, very small piece. It's just starting.
Now, you mentioned the company that you bought that does this matching of surveys or something like that. Maybe let's talk a little bit more about that. I found that fascinating. Who are your typical clients, and what do you bring for them?
Yeah, so there's 2 sides to that equation. There's the supply or the supply side, which is where we get all those survey respondents, and then there's the let's say the surveys, right? Most of the clients today, our biggest clients on that side today are research marketplaces. People like Cint, people like Dynata, people like Toluna. These are very large research marketplaces that have thousands of customers, and they go and source respondents from people like us. So that's our biggest customer base today for that respondent marketplace. That being said, if from a process perspective, if you think about how it works, is we're going to get respondents, we're matching them to the right surveys in those different marketplaces. And so, we're taking margin, and then of course those marketplaces take margin, and the end customer is paying multiple, let's say, multiple margins across the supply chain. So one of the things we're also starting to do now is go directly to end customers and market research firms, not necessarily the marketplaces, and say, you should be connecting to us directly. Excuse me. You may do 100 surveys a year, 500 surveys a year, whatever the number that is, you can buy through a marketplace who then buys from us. And again, there's margin stacking across that, or you can buy directly from us. We can offer you a discount of, call it 20%. We'll make 20% more margin and everyone's happy. So our core customer today are the marketplaces. We believe our long-term customers are going to be end market research firms or end customers that have enough survey volume that will integrate to us. Because that is a fully automated process, it's not a fit for a customer that has a one-off survey. They can use our full service capabilities, but from an automated perspective, they have to be able to integrate to us to use the marketplace. So it's only fitting for organizations that do enough volume that they can actually do an integration with us.
How big is a market like that? Like, how big is the service that you provide? What's the potential?
Well, so the market leader, and I don't think they have more than 20% of the market, is Cint, and I think they're about $1 billion euro company a year. So just to give you an idea, and that's only on the research marketplace. That's not even any other parts of what RIWI does.
Wow. Okay.
So it's huge.
Yeah, very big, obviously. And let's talk about your sort of, who are your typical clients for your services, not just this service, but I mean, who pays you?
Yeah, so I'm going to separate it into maybe two distinct areas. There's a respondent marketplace where I talked about today. It's other marketplaces and some market research firms primarily. And then there's our full service business, and our full service business is us doing individual surveys for people, or it's people subscribing to our data feeds, right? And for that full service business, it's going to be financial service customers is one of our fastest growing places. So these might be hedge funds, they might be buy side, or they might be sell side financial institutions. They could be, retail investment banks, wholesale banking. Like there's a number within the financial services industry, primarily firms that do fundamental or macro type investing. So we don't do a lot on the quant side today, but primarily on the fundamental and macro side. Then we have government agencies. So the largest part of our government agencies in the US will be international aid organizations, people like USAID, World Food Program, Comonix. Like these are places that are doing aid around the world, right? And need good data so that they can develop the right programs. So a good example, in Ukraine right now, there's a lot of people that are displaced. Who's displaced? Where are they going? What kind of needs do they have? Is it water? Is it food? When the U.S. pulled out of Afghanistan, what was happening? There was a lot of gender-based violence. Women were no longer allowed to go to school. There's a lot of these things that we're tracking, right? Particularly sensitive things in China or other areas. So that's another area. We are also selling a lot to academics. So we have a very fast growing business in the academic space where just financial or academics, they're doing research on a variety of topics. It could be politics, it could be health, it could be other social issues, whatever they're doing research on, they often need survey data. And so we will then be able to work with them. On the academic side, it's a bit more of an investment. It's lower margin. Academics have less money, but there's also a long-term play, because if you start to establish yourself at the university level, especially with PhD students and researchers that will eventually go and get jobs in other places, once you establish that relationship early, you could become their partner and supplier as they graduate and as they go into other jobs in the future. So the way I think about academic, it's a profit center, but it's an investment into having long-term customers and building long-term customers that will go into other places. We also are working more with market research firms as well. Historically, we looked at other market research firms as competitors. Now we've taken a different approach because we have our research marketplace, we have other capabilities. We are actually going to work with other market research firms and say, you can do what you do. So maybe what you do is all the analysis and everything else, but you still need good data. You need it provided in a structured way so that you can do your analysis. We don't have to do all the analysis. You can do it if you want, if it's your project, but let us do that upfront data collection. So market research is another area. And maybe the last thing I'll say, and this is more of a Q3, but we're starting to experiment and see some demand in high-tech software organizations, software implementation firms, more looking at us as an analyst, sort of like the Gartners, Forresters, or the Aberdeens, or the MRs of the world, where they would go and do market research, create reports on market trends and everything else, have customers sponsor it, and then put those out. So we've actually won a couple smaller deals, right? I'll say in Q3 in those areas. Starting to see and pick up demand. And we believe that if we can do enough of these deals in a specific subsegment there, we will start to establish a brand. And what's really nice about it is that we generate reports that become RIWI reports. So it's not a customer's report, but they use for internal purpose. These are things that will be externally facing, that people will download because they're interested in the topic. And what that does is build brand for us. And as a small company, building brand is,
big deal.
It's huge, right? Because the customers are to you versus us having to chase them.
Right. Yeah, exactly. I want to take this moment to remind everybody, if you've got a question you'd like me to ask Greg, please use the chat function and I'll fire the question off. So a couple other changes that we saw, brand new board, or at least a couple new members of the board. Maybe tell us the skill set of the new board, what you're hoping the board can do to help out the business.
Absolutely. So let me start with the original RIWI board that had been there, 5-7 years. It was a great board, very supportive, and had been there from the onset of RIWI as a public company. And so I think RIWI owes a lot to the previous board because they really helped RIWI, through the early days, through a lot of different things. But as anything goes, after 5, 6, 7 years on a board, and you've kind of provided and helped the company get to that next step, well, it was time for a bit of a refresh and time to bring in a new set of skills. So we made the decision with the previous board that we needed a refresh, and we identified what were the skills that we needed. And so we brought in 2 new members, and one is David Kincaid. And for those of you that don't know David is in the Marketing Hall of Legends in Canada. He's a former CMO of Labatt. He's the guy who brought TSN to Canada. He was a former CMO at Corp. So he's got a huge, and he's the CEO of Level 5 Consulting. Level 5 Consulting is a strategy company and brand strategy. And so what he's doing, he's helping us think through strategy. He's helping us think through brand. He's helping us figure out a better go-to-market plan. And once we get through that process, he knows everybody in packaged goods and retail and a lot of these areas in Canada. And so he's going to start to open a lot more doors for us as a customer. He was also on the other side before. When he was at Labatt, for example, he bought just about everybody's research and everyone's survey type stuff. So he's been on the other side. So he's also able to tell us, this is what customers really think. This is how they make decisions. And this is what they care about. You can talk about all this other stuff, and maybe that matters for other customer segments. But if you want to win here, this is what you need to do. He's also focused on culture and a number of things that's really helping. And what I'll say, both him and Lenny, and I'll talk about Lenny in a second, are so active that we now have a board that meets with us every single week. There's not a week that we don't meet with various board members, not as a board meeting, but as consultants, helping us think through things, helping to introduce us to people, helping us solve problems. And so, again, we're going from a board that I think probably did that several years ago that became a bit more passive to now an incredibly active board. And then Lenny, who's our other new board member, is fantastic. In the market research world, he is a brand. Like, he in himself is a brand. Everyone in market research knows him. He's one of the founders of Green Book. He does a consulting business. So he's been introducing us to future salespeople and saying, you want to talk to this person, you don't want to talk to that person. When it comes to M&A, he's helping us think through what are the right M&A, what are the right type of firms, what's really happening behind the scenes. And here's the truth behind the veil, let's say, on these companies. He's also helping us think through, on our strategies, are we making the right decisions? And he's testing us, and he's challenging us. So from my perspective, he makes our life more difficult in a really good way, right? And he doesn't just accept things, but he's really challenging us and really helping us. And for me personally, I really appreciate just the amount of time. And I did not expect this amount of time that either one would give us. And they're absolutely fantastic individuals.
Right. I mean, it sounds like the right kind of board for what you need right now. Is there anything else that's kind of missing? Is there any other skill set that you're either hoping to get or, hoping to get?
There's probably lots of, as a small company, there's lots of skills that we're missing and lots of places where we could use help. I think right now we're pretty satisfied with the size of the board and the skills we have. As a company, we need to be ready to take on more stuff and to be able to ingest more feedback before we want to try and bring in more skills at the board level. So, Lenny and David are already challenging us, pushing us in a number of ways. And there's only so much the management team can actually take at this point, because we're just, there's just not a lot of resources. So I think we're good right now. Over time, we will probably look for someone who's maybe a little bit more on the M&A side, a little bit more on the financial architecture of things, and not a CFO type, but someone who's really more capital
Mhm.
markets focused and can really help us think through some of those things.
Mhm.
But not there today, and I think we already get a lot of support from some of our really strong investors today. So
Mhm.
I'll say we're thankful that we have a great group of investors that are really supportive, and I'm going to say giving us a ton of free advice, which is
Mhm.
really helpful, and thank you. So also Trevor in particular, really thankful.
Yeah.
Even in, we're working on an investor deck to give you an example, and he's giving us feedback. This is what investors care about. This is what how it should be put together, which it may sound simple if you live in that world every day. But
Mhm.
when you're an
Sure.
operator and you focus on the operations of the business, you don't always think every day about how investors want to see things. So we're really thankful to get that kind of support and advice.
That's fantastic. Um, Challenges. What, I mean, still a small business, still, I imagine a myriad of challenges, but what's a handful of things that are keeping you up at night, if any?
Yeah. So as you said, we have lots of challenges. Probably the biggest challenge we have today
Mhm.
is recruiting really good, strong people, especially on the sales function.
Mhm.
I'm able to find people in operations, in data science, in market research, programmers. Like we can find good people across all layers. It takes a bit of time, but we can find them. Sales is the single most challenging thing to find a really good salesperson. And I'll be honest, I've been in sales for 20 plus years. That is not anything necessarily unique to RIWI, but it
Mhm.
is a little bit more pointed when you're a small company, right? Because a great salesperson will look at a very large, billion-dollar company and say, "I'm a great salesperson. I probably don't have to hunt because the opportunities come in, and I just have to work a big enterprise deal." With RIWI, we don't have the brand, we don't have the reputation. So these big enterprise salespeople, they need to not only work a deal and be able to win, but they need to go hunt and find those opportunities as well until we get our brand and our marketing really humming well. So I'd say recruiting sales is recruiting the right sales is the number one problem. Uh,
Mhm.
Besides that, it's just we have a lot of stuff we want to do. Our strategy has a lot of things, and we just don't have a lot of people in the company. And we're trying to figure out and manage this balance between profitability and cash burn.
Mhm.
If we really wanted to accelerate growth and everything else, we'd probably go and hire 10 people. Well, if we hire 10 people, which would really help us in a number of areas and accelerate our product, accelerate just a lot of things, we'd be highly unprofitable, which we're not going to do, right? So just so we're all clear, we would love to do this. We're not going to do this, right?
Mhm.
So, we are committed to getting profitable, getting and making that happen. So we're figuring out that balance between profitability, growth, and just the lack of resources. I'd say those are our two biggest problems. If we solve those two things, everything else will fall into place.
Mhm. Now, earlier you mentioned M&A. You did a transaction a while ago. Are you still looking? And if so, what sort of things are you looking for?
So yeah, we did complete research on mobile in July 1st, 2022, which was great, and it's really making a difference and helping us now. We have been very active on the M&A side. So we've looked and gone to various levels with probably in the last year 10 or 12 companies. We got as far as a signed IOI with one firm, but it fell apart during due diligence. And as much as we believe in M&A, we want to do M&A. We believe it's a key part of our growth strategy. We're not going to overpay. We're a small company. We can only, it has to be an accretive deal on a revenue, on a profitability, on a profitability per share basis. There has to be synergies and technology, and it has to fit the strategy, and the teams have to be able to merge, because the number one thing that can kill value really fast is if culturally two companies are not able to work together at a cultural and integration level. You can always figure out technology, you can always figure out business process, but you have to see eye to eye on a number of things. The one that fell apart when we were the furthest along was under due diligence. The numbers that were represented to us did not come to be, and so we reduced valuation to reflect it. We still thought it made sense, but at a different valuation, and they were not willing to do it. And part of the challenge in that space is private organizations. They don't see valuations the way public companies do. As a public company, the market evaluates us every single day and tells us what we're worth every single day, right? There's no hiding it. There's no discussion about what it is. I can say I'm worth this, but the market will say you're worth this, and
Yep.
speaks, right?
Yep.
A private company, no one's doing that for them. So everybody thinks, oh, well, I'm losing this amount of money, or I'm break-even business, but I'm worth, 20 times my revenue. Oh, you're not, right? And so that's a struggle. But going back, so we still have a couple of firms that are in our M&A process. We are looking for firms that fit really a couple of categories. They have to increase our platform, right? So again, we're only looking for strategic acquisitions. We're not a roll-up firm. We're not a financial instrument company. We are building a platform. So they have to fit our platform and help us grow, our technology up and down the supply chain. They have to be profitable, right? They have to be of a size that we can acquire. They have to culturally be able to fit with us. So those are sort of the parameters. And again, we've got a couple that we're looking at right now. No one that's too far in the process, but we've got one from my perspective that looks really interesting. We'll see where things go because you never know. But we would like to get closer to the respondents. We would also like to get closer to the end customers. So the more that we can do on either end of the supply chain would be very beneficial for us. And then the other thing would be if it can really increase our analytic capabilities, or if it can bring us into more qualitative type surveys, because when you're doing quant-based surveys, which is what we do, I have a lot of customers that then want to do a qualitative survey, which is I want to do an interview, like a 1-hour interview, like a Zoom interview with people. But there's a whole set of processes and technologies that go with that, and so we can do that through some other mechanisms, but improving that type of functionality or more functionality around specific targeting of individuals, because we have the demand side on that piece, but we lack some of the capabilities and supply on that side to do those things well. And if we could do that, we would be able to grow the business fairly quick.
Now, earlier you mentioned you guys have, for your size, plenty of cash. I think just over $2 million. Do you feel that's enough to get you to where you want to be right now? Do you envision a time where you might have to raise money, or is that going to get you to break even?
So we've made clear statements in the past, and I'm not sure if we did on one of these, but I'll make it here anyway, that we will not raise money for operations of the business. So we will get to break even with the cash we have. It is off the table to raise money to manage the company. Now, where we will raise money and we will do a raise is if we need it for M&A. So we will do it for strategic acquisitions. That is the only reason we would see to do any kind of capital raise, debt. And so we have no debt right now either. We don't even see a need to take debt unless we're going to find a strategic M&A. And our preference would probably be to take on debt, do M&A over issuing shares. At the share price today, which we think is highly undervalued. But because we have no debt and because of our requirements around M&A, which is we are looking for profitable businesses, we believe that we could use a small outlay of cash to buy anyone we're going to buy, and then fund the rest of it through the profit that comes from anybody we acquire. So we are not looking at any kind of dilution at this point.
So you mentioned you think it's undervalued. Maybe talk maybe some comps or some comparables that you think are out there that would justify your price being worth more, or how do you come to the idea that you guys should be trading higher?
Yeah, that's always
it's always exactly. Yeah. I want to get in your head a little bit. Because I agree. Listen, I'm not disagreeing, but I want to sort of hear it from you guys in terms of what could this business be worth, and why should people be considering it at a higher value?
Yeah, so let me start with just I'll put it out there. So I'm a buyer of our shares, and if you follow stuff, you'll never see me go and buy 100 or 200 or 500,000 shares at one batch. But I'm going to be a consistent buyer of 5,000-10,000 shares at a pop, and it'll probably be on a consistent every month basis. One, because I want to show the signal that I'm committed to the business, and two, because I believe that our share price will go up and that we are undervalued. So I'll give you the spiel in a second as to why I think we're undervalued, but I'm actually going to put my money where my mouth is because I actually believe it, right? So I think that's maybe an important point. It's not just a sales pitch, but from a undervalued, I don't know that I can say it's undervalued from traditional metrics and everything else. We're not profitable today, but if I look at the growth, we are going to grow as a company 30 to 50% this year, right? So just from a growth perspective, we're going to have significant growth. We bled a lot last year. We've taken our cash burn way down. We've committed that we'll be break even on a run rate basis sometime next year. Maybe it happens this year, but regardless of whether it happens this year or next year, our cash burn is going down. So our cash burn is going down on a consistent basis. Our revenue is going up. We're going to get to scale shortly, which will accelerate growth as well. We're bringing in new leadership in the firm. You've seen when you brought up the board members. We have some other people. we haven't announced, but we're going to be announcing another leader that we're bringing into the firm shortly. We brought a new CFO in a few months, so we're bringing in the right people to help us scale the business. We're seeing our recurring revenue increase, and if you look at our share price and our valuation, I think it's pretty much we're valued as a professional services type business, which is fair. Historically, we've been, but now we're starting to get that recurring revenue. We're starting to get the transaction revenue, which is a hybrid of the two, let's say. And so I don't think our share price has moved with any of those things. So I don't think the share actually represents accurately the value of the platform and the technology and the IP that we own. Small example, we own a URL, a domain that if you go on the website that values domains is worth like $450,000. You don't see that anywhere either in our balance sheet. You don't see it anywhere as anything else. We may sell it because it doesn't have a huge use for us right now. It's one that we used to use to recruit participants. It's not a great participant type one, but it's a big URL in the market that other people would benefit for. So we have a number of assets like that I think might be beneficial. We're also streamlining operations and becoming more global. So I think those are the reasons that I'm not getting into specific EBITDA.
Sure.
But I think it's always hard to argue when you're a small company. It's small company and large company multiples just don't equate the same thing.
Yeah, I think what you said at the beginning of this, the fact that you're buying stock is probably better indicator than almost anything you could have said afterwards. So anyway, it's so you said the right things there. But you also mentioned sort of 30 to 50% growth. Now we have seen some growth for sure. What gives you the confidence that you guys are going to be able to continue to grow? What are you seeing that we might not be seeing as investors?
Yeah, and so let's just, I want to make sure what I said is not taken out of context. So we will grow 30 to 50% this year, right? And the part that's easy to give context on that is, well, we did 1.2 in Q1, we did 9.2 in Q2, so that's already 2.1 something, right? That we have, did 2.8 last year. We will pass Q3's revenue we'll pass 2022 revenue in Q3.
Yeah.
We have that visibility. Because of recurring revenue, because of the transaction revenue, we have a certain amount of visibility. While we have visibility also on project revenue, that is the part that's a lot more variable. So I have strong confidence as to where we'll be this year because of that. Now, we haven't given guidance as to what our growth will be in 2024, 2025, but I did another call with another investment group yesterday, I think it was, and the way I articulated things was, without giving guidance, I personally would not be motivated to be at RIWI if we were going to grow 10% year over year. I have no interest in being here. That's not why I'm here. And if we ever have a plan to grow, or if I ever believe that that's all we can do on a future basis, and that's the time that I exit the business, right? So I will tell you that from my personal perspective, I am not motivated by that type of growth. I'm motivated by it has to be enough growth for me to be motivated, and I can tell you I'm incredibly motivated right now to be here. So,
So I guess what I'm trying to get at is the market size is there, the trends are there. You guys have the resources you need. You're starting to see, you got a recurring revenue base to work from. The pieces are there to get you where you're going to go.
Our strategy is taking shape. We are at the beginning of strategy, right? So let's be very intellectually honest about this. I mean, if you think about a strategy as a 10-step process, we're in step one, but we're actually at step one. Whereas last year, we were putting the strategy together and starting to put the pieces to be able to start executing. We are now executing on a strategy, and we're in the first step. But we still have many steps to go. Every step will have its challenges. I'm sure it will not be a straight line up. I'm sure we're going to go, have this kind of up and down and have several challenges. But from what I can see right now, all the challenges that we're going to encounter will be solvable with the right team, right motivation. I'm not saying it's going to be easy, but we should not need more cash to do it, except for on the M&A side. We will definitely need to strengthen the team in several areas that we're still lacking. We're going to have to increase and figure out the sales thing. I think RIWI has struggled from a sales perspective on our full service area for 4 or 5 years, right? I mean, we struggle to find really strong sales talent. The interesting part is that we're starting to build a little bit more brand. We're starting to, and as we're getting some of these new board members, we're starting to get some credibility where we're at least getting discussions with some really talented people that would not even take our calls in the past.
Mhm.
That's not only on the sales side, but even in the customer side and the partner side.
Mhm.
And we haven't announced it. We will announce it officially after, but it's on our website, so there's nothing secretive officially about it. But we have officially launched now also RIWI Communities. RIWI Communities is our certified partner network, which is going to extend our capabilities. In a number of areas around types of market research we can do, types of data we can collect, our reach. And good example, we got asked to do a survey, both a quantitative and a qualitative survey in China, Japan, India, and Korea. And we could only do the quant side before. We couldn't do the qual. Through our RIWI Communities, we're able to do that. We've had a number of projects recently that we could not do with our traditional tech, but through RIWI Communities, we're able to do it. And so our reach, our ability to say yes, and is growing. And what's really important about our ability to say yes, when a customer comes to you and they have a need, and you say yes, the next time they have a need, they come back to you first. If you say no, the first call they have, the next time they have a need is with somebody else.
Mhm.
So I don't want to say no unless it's something that's completely out of our realm. If it's within our realm, I want to say yes because I want that relationship, because customer acquisition costs on a repeat business is about 1/8 the cost of customer acquisition cost on a new logo. So it is really important for us to be able to say yes to the right customer segments and the right type of people. If it's a different area, if we're talking about utilities, and we don't do business in that area today, I don't need to say yes. It's not my focus. But in our core focus areas, I'd need to be able to say yes.
Mhm. Now, Greg, you've defined and you've just told us about the strategy that you have right now. We'll take it a sec here. Okay, good. Okay, so the strategy you just talked about, Greg, what as investors should we be watching for, or maybe even catalysts or some sort of metrics? What should we be watching for to understand that you guys are continuing to execute on this strategy you've put in place?
Yeah, so definitely look at revenue, look at profitability, look at recurring revenue and transaction revenue. I think those ones will be very specific. We don't officially release gross margin numbers and some of those things today, but we are committed that over the next year, probably on every second quarter, we're going to start adding more and more metrics to our disclosures. Our vision as a company is to be the most trusted and transparent source of global data and insights. The and insights, by the way, is brand new as we reviewed our strategy. Is we're starting to find that where customers are asking us not just for data now, they're also looking for us to do some analysis and give them what are the insights that are coming from the data, which actually is really important. It's the very beginning of our journey in it. It's not something that we're strong on yet, but if you think about data is worth $1, insights worth $4. So we can charge them for the data for the dollar, then we can charge more dollars when we start to do insights from that. So it is really important for us to grow into that. So it's not a change of our strategy. I'd say it's a tweaking of our strategy, or maybe being a bit more specific and understanding of our strategy. But we will add more and more, because our vision is to be trusted and transparent. We intend, even with our investor community, to add more metrics. We've built a scorecard now of about 30 metrics that we're starting to track. We're starting to give it to the board now on a monthly basis. This is brand new. We started it for the first time in August, so we did not have that before. These are the metrics that we think are important. We will start to see and make sure that they are the right metrics. And then we will slowly, as we know that we've got consistent visibility, we're able to do them, we will then start to slowly make these visible to the market. Again, every couple of quarters, we'll add a few more.
That's perfect. This is great. I mean, it's always good to catch up and sort of get back up to speed. But any other key message or anything you want to say before we wrap up today?
I definitely appreciate all the investors, and many of them on this call have been investors well before I joined RIWI. So, these long-term investors, this is what we need, right? I mean, we need people that are willing to stick with us, understand we're a small company, we're going to have ups and downs. And, if we didn't shake you off last year, I don't think we're going to have another time like that. So I personally believe we're through the roughest period that we'll ever have on a go-forward basis. So I want to thank you for sticking with us through that period. And if there's other things people are looking for, please let me know. I mean, a small example, we were asked, I think at the end of, maybe it was Q3 last year, at the end of Q3, someone said to us, it's great that you put all the stuff in your MD&A and your financial statements, but really we want the basic stuff in your press release, right? So we can go through the press release, we can get the core stuff out of that. We don't have to go through everything else. We started doing that at the end of our fiscal year last year. And so if there's things that anybody on this call or anyone else wants from us or is looking for, please bring it up. We want to be a very investor-friendly company. So we will answer those questions, and we'll try and deliver those things. And also, if you have questions, reach out. I will ask that it's always better to email us than leaving voicemails. And tell us who you are when you reach out, because we sometimes get calls, people asking me to call them back, and there's no context, don't know who they are. And so those people are not getting called back. But I can tell you, and there's some people on this call, they email me, they go on LinkedIn and send me messages, and they've said, hey, this is who I am. I'm a long-time investor and I have some questions. Can you respond? I will always make time to respond to people that tell me who they are, and that they're an investor, and those type of things will always be. And if not me, someone else will come in, but everyone will, as a company, we're committed to be very investor friendly.
Fantastic. Always refreshing to hear that the CEOs recognize the importance of shareholders. Greg, thank you so much. We've been speaking with Greg Wong, CEO of RIWI, RIWI on the Toronto Stock Exchange, or is it Venture Exchange? I've actually forgotten. The Venture Exchange. Sorry about that. RIWI on the Venture Exchange. Greg, thanks for joining us today. Look forward to catching up in the near future.
No problem. Thank you, Paul.
Excellent. Thank you. Bye for now.